Oh, hello everyone. Today I'm going to be talking about XRP valuation with full valuation details with Excel spreadsheets, which I'll be selling in UDEMY with a coupon. And the course is called A Structured Approach to Financial Modeling Valuations. And it's actually like a 3-year finance degree with Excel spreadsheets that you use within the work environment. Within front office, on the front office dealing desk, but also in terms of financial valuation models for valuation of financial assets and that sort of thing. So it's a really, really good course. It took me quite a long time to do this, and it's valuing all assets, and particularly focusing, we're building up a valuation model for XRP. So the course has 84 lectures. It has at least 13 or more Excel spreadsheets that you get access to, has many research papers, academic papers and resources. It has quizzes and assignments which I'll be marking, has access to me. You can ask any sort of question. It's looking at most financial asset valuations. Now there's different models for financial valuation assets, and it depends on the type of asset to what sort of model you would use. And there's many types of financial models for valuing different assets. And what we're doing is we're looking at valuing financial assets for equity, fixed income, which is debt obviously, bonds, foreign exchange, property, business, and cryptocurrencies. And we have within that crypto case studies for cryptocurrencies, as well as 2 valuation models for XRP. Now what I mean by different valuation models, say if you're looking at Bitcoin, you wouldn't use a discounted cash flow model with Bitcoin or the terminal value like you would with, say, Ripple XRP, okay? Because they're very different cryptocurrencies with different ecosystems, completely different type of client base. One's proof of work, one's completely different in terms of the technology. Ripple XRP has clients, it has revenue, it sells the technology of its system, and it sells, an incredible system that can basically settle cash flow within 3 seconds. So completely different valuation models. Also, a financial analyst or a financial valuer has generally had years of experience in financial markets and has to choose the right valuation model for the right financial asset. If they don't choose the right financial model for the right financial asset, it basically is it doesn't make sense at all, okay? Now people do many courses on this when they graduate, and they might do master's degrees like me or whatever, but they'll do, for example, a financial analysis type course. They'll do, post-grad type courses. They'll do the US course, which is a very hard course that a lot of fund managers do, which is the CFE course. And it takes a lot to value financial assets and to know the right valuations. So say, for example, you're valuing equities, and everyone, all the big investment firms will do a forecast of equities. Well, a financial analyst or an equity analyst will basically have all the basic balance sheets, obviously the financial balance sheets, financial profit and loss, financial cash flow statements, which are all historical, and then added to that, they'll also add, qualitative factors and other quantitative factors that they'll use to build up a model to forecast the equity price of a company. Now, the thing is, cryptocurrency, whichever way you want to slice it or dice it, okay, it needs to be valued like an equity, okay? Now, yes, some don't have revenue the way we see revenue, some have more utility, but the fact of the matter is, if the technology is not earning revenue, then it is not going to be paying its developers, and then the technology going forward in time will not be the best of breed technology and won't be keeping up with the technology of cryptocurrency technology. Okay, so it's really important to know the technology, to understand it, and to ensure that that technology is best of breed technology. And that's why the valuation process is so important, And valuation models are subject to error because it depends on what is inputted into those models, what statistics and what assumptions of the model are used. Are the assumptions reasonable? Yes, we have the stats, but we're also looking at a forward price for an asset, okay, whether it's an equity, whether it's foreign exchange, whether it's property, whether it's cryptocurrency, and it has to make sense, and if it doesn't make sense, then the valuation model itself is worthless, okay? And as I said before, there are many different types of cryptocurrencies where we use valuation models differently, or different valuation models depending on the cryptocurrency, okay? And that's an absolute fact. So if we look at my Udemy course, I'm talking in the next video of this, the valuing of XRP, the cryptocurrency course that I put on Udemy, and it will have a coupon, is basically a step-by-step guide how to create a valuation model for XRP. And there's actually 2 valuation models in that. And the 2 valuation models I look at are discounted cash flow with terminal value, and also EVA, which is enterprise valuation model, which I go into in detail within the Udemy course, which I don't want to go into detail here. But basically those 2 valuation models require components, assumptions, actual data input, like for example, how many nodes does Ripple technology have, how many clients they have, what's the forecast of revenue, what sort of technology does it have, is it best of breed, how many ledgers have they run, i.e. for example 50 million, has it had any hacks compared to other cryptocurrency technology that's had hacks, like Bitcoin Gold, for example, like Verge, for example, like Zcash, for example. What is the competition like in terms of Ripple and its technology? We know Ripple, is the best of breed in terms of payments for cross-border payments, but it's also going to other technology, in terms of YouTube, in terms of social media, in terms of platforms. I mean, the list goes on and on. So what's the value of that technology going forward? When clients pay Ripple, those 300 clients they have, which are millions and millions of clients, because those 300 clients have 16 or 19 or 20 million clients, which they have a network of clients. So Ripple itself has millions of clients. So going forward, what's the value of those clients in terms of revenue? It's a lot, believe me. What's the ecosystem like for Ripple? What's the security like? Is the ecosystem getting bigger and bigger? And what I mean by that is, how many exchanges is XRP on? What's the utility of XRP? How many holders in XRP? How many wallets? Is it growing? Is the volume growing? What's the liquidity? The macro and micro factors that affect Ripple and XRP. Regulation. I mean, the inputs are tireless. Again, you could put so many metrics into a valuation model, okay, because you want basically what you know now in terms of data and valuation to come up with a forecast in 2 or 3 years' time, which that forecast will actually then be checked to the actual price of XRP in 2 or 3 years' time. So it could be quantitative factors, qualitative factors. For example, qualitative factors. Does Ripple's management, have a good reputation? Are they honourable? Do they have great experience? Are they progressive? Does the market do the market think they're great guys, for example? It's qualitative. Intrinsic fair value. What is the fair value of Ripple's XRP? And that's what we're trying to find with our valuation model. What's the regulatory process? Ripple are doing more than anyone to talk to the regulatory environment, to talk to the Fed, to talk to the Security Exchange Commission, by setting up an office in Washington. So compared to the competitors, they're doing more than anyone. Now that would go into a valuation model, for example. What are the regulatory barriers? What are the assumed growth rates of utility in terms of XRP? What are the assumed growth rates of the clients? What are the assumed growth rates of Ripple selling their technology? What are their competitors doing? Are they going to overtake what Ripple's technology does? How many burned coins are there? How many coins are lost? I mean, the list goes on and on and on. For example, interest rates. What sort of interest rate will you discount the cash flows of revenue and the net cash flows of Ripple, for example? You know, a lower interest rate will increase the discounted cash flows, okay? You know, what are the credit borrowing rates of Ripple? Will they deteriorate as time goes on? Or the funding rates? They did debt the other day. They issued 200 million in bonds. Will that funding rate increase as their position worsens, or will that funding rate reduce because their position gets bigger and bigger and bigger? You know, there's so much to put into a valuation model. And, you know, the thing is, it's our best estimate of what we know now with the data and the factors we know, and we're trying to forecast the future. Now, any valuation model that anyone uses, whether it's an equity analyst or whatever, and they're coming up with a stock forecast, that valuation model is going to be completely added to on a daily basis. The equity analyst will go to the company, you know, and look at what's going on. They'll talk to, you know, people that use their products. They'll go, you know, say if they're selling groceries, for example, they'll go to the shops, they'll talk to housewives. I mean, it's constantly updating any sort of factor or anything that's going to change the price of that stock. Now, cryptocurrency should be no different than that. Okay, so you get my gist here. Sorry, I'm actually watching my markets. I'm actually trading cryptocurrency, but I'm also trading, you know, currency. I trade foreign exchange, and I also trade equity indices. So I've just got to keep a close eye on things. So much is going on. So the valuation models I've used for XRP, as I said, are two models, and interestingly enough, they gave me very similar results, which shows me the robustness of these models. Okay, and as I said, I use discounted cash flow model calculated with terminal value and economic value added. Now, because we do a discounted cash flow model for only 6 years, okay, it assumes that we're only doing 6 years, assumes the business only lasts 6 years, but that's not the case. So with terminal value, it actually assumes that the business is ongoing, right? And so you price up the revenue of the business after 6 years for a terminal value of, you know, of the revenue growth of that business after the 6 years, okay? So that's what the terminal value is. Now, also the second model I use for valuation was the economic value added model, or sometimes it's known as enterprise valuation model. I don't want to go into these too deeply because you will see these in absolute minute detail in my course in Udemy. And basically that model was literally, it's residual income, it's looking at the operating profits, it's looking at equity and long-term debt and all those sort of things. But interestingly enough, we came up with the same price. Okay, so you will see there's an absolute minute detail within Udemy when you get access to my course. And the learning in that course is like a 3-year, business degree, finance degree, seriously. And also it's like being on the front desk, for 5 or 6 years, in professional trading houses, middle office where you do revaluations and back office. So the course is pretty amazing, I have to say. So that's that. What you need to do to get access to this course, and it's called A Structured Approach to Financial Modeling Valuations, you go to Udemy, and basically you have to sign up with Udemy. You have to get an account with Udemy. You need a coupon to put in Udemy to get the 20% off the course. Now, I've only just started selling this tomorrow, and it's valid for 31 days max. That's it. You won't get, after that, you will not get 20% off. Okay, because I'll be selling it for its real price for €199. If you use this coupon, you'll get it for €160, and it's like 84 or 85 lectures. It's amazing. You've got so much resources in this. It's unbelievable. Structured Approach to Financial Modeling Valuation. There's a coupon code, which I'll put in the details of YouTube. This course is extremely educational. It's a tax deduction. You're not going to learn anything better than this, believe me. Honestly, you're just not. So it's just that simple. So basically, this is the coupon code, which I'll also put in the details of YouTube. And, you know, again, you'll have full access to me as well, and exactly how I built these models. But it's literally, you've got to go through the whole process to basically understand how you build models. It's not that easy, okay? And I'm not like other YouTubers that go, you know, you know, XRP is going to, you know, moon and it's going to be 100,000 or something. It's just absolute bunkum, right? It's garbology. You know, I can prove with every bit of information how I came up with a valuation, you know, and that's the fact, right? So if you don't want to, you know, learn and get educated properly, then fair enough. But you know, this is very valuable, and if you really want to know and you want to understand, then please, you know, use this coupon and get access to my course. It's only going to be for 31 days. That's it, till the 7th of March, and you'll also have access to me as well. Now, what I'll discuss and look at is just the values that we came up with for XRP using both these models. Now, we had discussed these models in previous lectures in quite a lot of detail, so I won't be going back to these models to discuss them, but I just want to show the values that we came up with using the discounted cash flow value model and using the enterprise value model. So if we go forward, you'll be able to see those. So just to recap, this is our discounted cash flow model. It was over 6 years. We discounted by 10%, brought those cash flows back to net present value. Then we had 3 different circulating supplies, obviously one from CoinMarketCap, one from Azario, and one with amended lost coins that we know about, and amended burn as such, burnt coins, which are used in the XRP, the Ripple system, to ward off hacks and that sort of thing. So if we go to the enterprise value model that we're talking about, we also had the same circulating supply, and we calculated 3 different XRP values as well. So I've gone into quite a lot of detail, read this model as well. So just look at previous lectures for that. And what we came up with at the end of the day was very interesting. The price of XRP over a 6-year period, brought back to now, the time period now, in the discounted cash flow model, DCF, for CoinMarketCap using 42.832 billion circulating supply for XRP, we came up with a one price unit for XRP of 1,186.32 cents. For the enterprise value model, we came up with $1,128.75. When we then adjusted for coins that were lost and burnt coins and brought that supply down to 38.872, we came up with a DCF of 1307.15 for the price of XRP for 1 unit. And the EV model, we came up with 1243.73. The Azario amended circulating supply, which was the 21 bill, we then came up with a price of 2328.58 XRP, and then when we used the same on our EV model, with the same supply, we came up with 2215.61. Worth 1 XRP would be worth that within 6 years, with all the assumptions and all the data that we know about Ripple today. Now, what's interesting about this, and it gives me a lot of solace, is these are 2 different valuation models that we've used to determine from the information, the data we know now, and we put it into our valuation model, from all the information and data we know now in terms of Ripple and their client base and what's circulating, and you know, making assumptions about the revenue they're earning, making assumptions about how much is going to be utilized, how much is going to be in the system, you know, what's going to happen in the future. And it's always very difficult to do that because these are valuation models, and it's always subjective to the assumptions that you put into them, right? And no valuation model is going to be correct. But what I think is very interesting about this is we have 2 separate valuation models, and we've come up with a very, very similar fair value worth or intrinsic value of XRP.
which I find very, very interesting. Okay, now, yes, we've had to use some of the elements within the enterprise value model, i.e., for example, earnings, revenue before income and tax, and amortization and depreciation, and taken out, obviously all the cash flows that go out, and then multiplied that by earnings over a time period, assuming how, earnings per share over a time period. We've used 29, and we've discounted that value back over the discounted cash flow rate. But the interesting thing about this is the two models have shown a very similar value. And to some degree, that gives me consolence in the sense that it shows you that the assumptions that we've applied are probably reasonable. They may not be necessarily true or exact, because we never know. We can't forecast the future. No one has a crystal ball. But it does to show a degree of robustness and reasonableness, because we've come up with similar price per unit for XRP. Now, what it does say, and yes, our assumptions might be too high or too low, but in both models we've shown some very conservative assumptions. Over time we've only assumed, the market, Ripple might have only had 5% or 2% or 3%, and, of usability and getting more clients. But either way, it does show that the market value of XRP, and when I started doing this, the market value of XRP was 40 cents. Either way, it does show that the intrinsic value, or the fair value for XRP, should be a lot higher than what it is. Absolutely. Even if we went into that model again, those two models, and I literally changed the growth and the assumptions and cut them by 1/10. Even if I'm completely wrong and I cut the revenue and everything down to 10%, I'm still going to come up with 10% of these prices. You get my drift? 10%, which is the lowest, right? Even if we assume they get hardly any business, the fact of the matter is the fair value price, or the intrinsic value price, should be a lot higher than what we are looking at for the market value price of XRP. Now, I've looked at many different pricing models. I've changed it. I've reduced my probabilities. I've gone literally where they're not even earning hardly any revenue. But either way, Ripple is a software technology company, the best of breed, literally. And if you look at the pricing in terms of equity or any other market, the pricing for the XRP it's just not correct. Now, I know you're going to say, but they don't operate like an equity. Of course they don't. But the thing is, XRP works in the technical system of Ripple and should be a reflection of the value of that technical system no matter what. Now, even if a client doesn't use XRP themselves, Ripple themselves are still transacting on behalf of the client, and they will use XRP. So either way you like it, cut, slice and dice it, even if we're 90% wrong in terms of two of our valuation models, DCF and enterprise value, and we're 90% wrong, and we only get 10% of these prices, it doesn't matter, because it's still saying 130 or 232 against a market price of 40 cents. And it tells me something is dramatically wrong with where the cryptocurrency community or the players in that community see the price of XRP. Whichever way I cut, slice and dice this, XRP, according to my models and hand on heart, is seriously, seriously undervalued, underpriced. Now, this is not, again, this is education only. It's not financial advice. It's education only. You can have all these models that I've put together and cut down all your assumptions. Go the worst bearish case you can like, down to 5%. But either way, I can assure you, I absolutely believe, hand on heart, you will get more than an intrinsic value of 40 cents or 32 cents or whatever XRP is at the moment. I think at the moment it's 32 cents. today around the 22nd of July. Either way, that market value is just way too low for what's the revenue that's being generated in this company and the usability and utility of their technical system and XRP, the cryptocurrency. This is education only, but thank you. Play around with the models, and please, if you do have any questions, come on to Udemy, and I'm certainly happy to answer them. Thank you.